All right, all right. Good morning, traders. Happy Wednesday, everybody. It's one day in, and we're already at the midweek check-in. Always interesting to have a 4-day trading week. Good morning, Michael. Good to see you, sir. Driving, Greg, listening. Got it. Got it. Maybe there'll be something interesting you want to pop into the recording later, but I think that's fine. Should get something from it still. Good morning, Bob. In another state, so your time calculations were correct. Hooray. I'm glad you made it. Okay, looks like the initial round is in. Everybody's audio's turned on. Let's get going. Welcome to the Market Watch Group midweek check-in. I am Scott. I will be your host. Uh, Good morning, Perry. Good to see you, sir. Here's the disclaimers, as always. These are in your emails if you ever want to read through it in more detail. Here's today's agenda. Looking at today's opening analysis, futures are down a little bit. We're not. We got off of the lows yesterday. We ended up with a doji that was still in context with the trend lines I have drawn. So, okay, yeah, it's hard to decide. I've got a hedge on. Two, in fact. Well, one in change. Market's just kind of sitting there. It's a little bit of a precarious position, but at the same time, things are still technically okay. We haven't broken any supports. Haven't seen any volume ramping up. Well, we did last week. Not this week, though. So it's going to be an interesting time. Additionally, the tendency. Sorry, let me move this out of the way. The tendency that we have in this late February is somewhat sideways to a bit of a consolidation. So we'll look at that as well. Mindset for open trades. I will be curious as we go through the watch list. Are you in bullish trades still? You're holding a few of your bullish trades still? If so, which ones? I have a feeling maybe that you are, but I will be curious to see. Are you keying in on any specific setups, etc.? We'll review our watch list. There's plenty of setups on our watch list, and yesterday only further promotes them. None of those setups are. Sometimes when you have a setup, it invalidates itself because it's more than a setup. It's not like, oh, it pulled back for 2 or 3 days. All of a sudden, it pulls back for 8 days and it's all the way back to its prior low. That's not a setup. That's a potential reversal. There's a big difference between that. So we're exploring setups, meaning all the characteristics that we're looking for are still intact, even as this setup, or excuse me, even as this consolidation we're in continues. And we'll talk about trading plan progress. Congratulations, everybody. This is the first pass. We're on section 8, working on improvement strategies / setting goals. And then next week, we go back and start at the beginning and we make it better. Constant improvement. We go back and we make it better. All right, let's get into it. So let's start here. This is what I mean when I say, yeah, yesterday. Now, don't think, oh, there's, the market was down yesterday or whatever. Just look at this. Look at the picture we see here. What do we see? I'm in my trend. Now, this little bounce that we just got was not as high as this one. That did technically make a same high. And you might think, well, if it didn't get a higher high, are you going to score it differently next week? Not as long as it stays in this trend. Right? Now, if it breaks below this trend, then this trend is invalidated. It doesn't mean it's broken, doesn't mean it's going to become a downtrend. It just means it's invalidated that trend. Trends can accelerate and decelerate without breaking. So when we say, you know, well, without reversing, let me say that, without reversing, because sometimes someone thinks, oh, it broke the trend, therefore now it's going to start going down. No, it could break the trend and go sideways. It could break the trend and go in a less uptrend. So be careful what we talk about with regard to, you know, moving outside of its trend lines. But certainly it's in jeopardy today because we're set to open where are we? 495.37, about where my mouse is, which is, you can see, a little bit below, little teeny bit below. If we open and we have a bullish day, we'll end up above it still. And if that happens, I'll say, oh, okay. Now, if it doesn't, if it opens and it finishes down here and then it goes sideways, then we have broken that. We've broken that trend, and I will score that down a quarter of a point, just a quarter of a point. That's it. That's all I'm going to give it, because I don't know what's coming next. I'm not going to overreact to that, especially when, let me pull this over. Especially when we know that the okay, let me see. What images do I have here? Yes, fine. Sorry, just trying to get an image up here. Okay, seasonality chart. No, that's not what I wanted. Seasonality chart. Let's zoom in a little bit here. And what are we focusing on? We're looking over here in this bit, and you can see we do tend to have that sideways. Now, there are some years you can see, depending on when they do this, where we actually have a little bit of a retracement in January. We did not have that. However, what's the tendency in February? Retrace, but stable, right? Retracing, but stable. I want to understand where were my early February lows. You could say, I would actually still say these are my early February lows here, not this little 1 day blip here. So with that in mind, what am I looking for? I would be okay if this thing broke this trend and then dropped down into this area and stabilized. That's still a higher low from there to there. Now, would I drop my score a quarter of a point because of that? I would, but I'd still be a 6, still be very bullish. So if this thing comes down and catches here, I'm telling you that what we do tend to get cyclically in March and April are some of the best months. Whoops, I had a perfect square. If you look at what we tend to get from early March until the end of April, that's historically and cyclically 2 of the best months, right? With October and November typically. Now, this last October, we were a little off, but November and December were great. October, November, December tend to be very strong months as well. Those are the best months in any given year on a cyclical basis. Does that mean it always happens? No, but it means it happens enough that it created a pattern, right? So we want to be aware of that. And that's where we are. We are, we're moving into this zone here. We've already talked about that and said, look, we're not going to be surprised if we maybe see a little bit of this. as I ask these trading questions, nobody has like a bunch of trades on right now, right? Even though we're bullish with a high score on our bullish posture. Why? Because we can be bullish overall with our market posture, but our trading posture is where we're like, well, hold on a second. We've hit this point. This is where if someone just blindly is bullish all the time and they smash into this period because they're bullish, that's when they take extra losses, and that's when they really inhibit their growth. I hope this is making sense, connecting what we're doing very specifically to market conditions to say, look, you shouldn't be trying to force trades right now. We should be like, okay, let's relax. We've got some setups here. We're ready to go if they come. But overall, the expectations right now are definitely muted. Our posture has dialed back a little bit, still overall bullish. We have a hedge signal triggered by the VIX. So, of course, we're not like, oh, let's go work against ourselves by hedging and trading bullishly at the same time. No, that's that's not typically what happens. So that's creating my trading posture context. I'm not going to be surprised if we move through the rest of the month and into next month just a little chopping around sideways because we've seen that before. Okay. Questions, comments, concerns. Let's make sure we're dialoguing. Don't let me talk at you. Let's talk with each other. If you agree, if you disagree, etc. To what degree is tax season? You mean like personal tax season for individuals? I would say not at all. I would say right now we're in earnings, and there's always going to be earnings because earnings is just, earnings season. We're coming to the tail end of it now, but earnings season is just our quarterly window into corporate news, right? We have economic news, which is, what's been happening. And then corporate is kind of a mix between what happened and what do we expect to happen. So they're going to give us how did we do and what are we projecting. And so that's why investors and traders love earnings season, is because it's that. And that's why you'll notice, and there you can see it opened right where our mouse was, right up in here, slightly below. We opened slightly below. Does that mean it's broken? Of course not. That's not. Yeah, we're not breaking trend lines 30 seconds into a day. So, okay. So, yeah, that's our context. Overall, this if you just threw this chart up in front of me and said, what do you think about this? I'll be like, yeah, it looks bullish. That's the first thing I'd think. Looks bullish. I don't see any outstanding. Remember, one of the things we said we are looking for this week is selling volume. And you can see yesterday, even though at one point we were all the way down here, lower than we are now, we never got above average volume, right? We never got above average volume. The day before, on Friday, wasn't above average volume. Today, we'll see, but I wouldn't expect above average volume. We'll see what happens. Do we bounce back? Do we hover around this trend line? I don't know. We'll see what today brings us. Okay. Fed expectations, taking a real quick peek. We never really had any for March, but you can see it's continuing to get worse. It's moving to like 15-1 odds against. May is staying right around a 2-1 against. And June is about a 1.5-1. Oh, no, never mind. It's actually moved a little bit. Now it's more like 2.5-1 in favor of the first cut happening in June. Economic calendar real quickly. What are we seeing today? What are we seeing the rest of the week? Today we have some Fed speak starting this morning, a little bit ago. The next one started 20 minutes ago. And then the next one after that is later this afternoon. But I don't expect anyone to respond to that, especially when the minutes are coming. That's where people are going to look in to see, is there any coded language, anything that we missed. Sometimes the market will find something, but I don't know. These days, the Fed's so transparent in their verbiage in their press conferences that we don't really look at the beige book. That's another one. If you've ever like, what's the beige book? The beige book and the minutes are additional Fed uh, artifacts, if you will, right? Fed documentation that the market will peruse to find information. So Sandy says, I like the, yeah, seasonality is just, it's a useful look, right? I mean, of course, we don't think it's a crystal ball, but it's nice to kind of see, and if you ever went back and overlaid the composite, and then you just took like from January or from January to December of any given year, you're like, yeah, wow, it's crazy sometimes how accurate it can be. Okay, let's hit the market. Let's go see now. We're gonna get not quite our second candle yet. And you can see this is yesterday's low. 494.5 is yesterday's low. Right now, it seems to be holding this level. We bounced off of yesterday's low, and then we bounced again off of this 495 level. So you can see we touched 495, but we bounced off of it. We'll see what the opening range gives us. There you can see our trend line. Throughout the day, you can see the trend line. Early in the day, it's here at 496. And by the end of the day, it's up here at 496.5. So it's got some work to do to stay on that line. Okay, let's get to the watch list. We looked at everything, I believe, right? So we'll come back. We'll look at that opening range. So if it breaks, does that for any reason shift my fundamental perspective? No, it will not. It will cause a score change. If we see it, we score it. That's the policy, right? We're not here to think if there's a reason we shouldn't score what we see. That's counterproductive, counterintuitive. But I've already mapped, and you can kind of see this line coming into play right here, which could help define the area that if it continued to consolidate. And look, here's 500. So let's just think, every 1% is $5 from here. So a 5% consolidation is down here. This is 5%. I don't think we're going to see a 5% consolidation. I would think maybe 3% consolidation, which is exactly what that is, a consolidation. You'll sometimes hear the term correction. Remember that a correction is 10%. They're like, oh, bullish markets go through corrections all the time. They don't go through them all the time. They do go through them regularly. They go through that cycle, but a 10% correction, that's down here. So that might be something that we look for in May, June, in that if we get the bullish spring, I'm feeling optimistic for it. But then if we hit those summer doldrums and we might get a correction, it's important for us to understand what a correction is. And that's 10%. And if you look, 10% is us going from the top of this. Here's our long-term channel line right here. This black line that runs across the top. And here's our long-term a correction's always down. Yeah, no, always down, 10% down. That's when they'll call it a correction. The technical definition for a bear market is 20%. So people might say, oh, I'm bearish, but it's not a bear market until it's gone 20% down from its high. But what I want you to notice is 10% is basically traversing the distance of this trend, right? It would actually be breaking through this line and getting down to this line here, but that's a correction. So I have no expectation for that right now. There's no reason that we would think that right now. There's the possibility that in the summer we hit something along those lines. And then coming out of the correction, then what? Then we move into, ideally, we stay in a bull market and we move into the strong fall period of time. Anyways, I'm getting ahead of myself. We're short-term traders. Market seems to be stabilizing coming out of this. Let's get to the watch list. So there you go. I left Apple on my list because I felt like it was still looked like a slightly higher low. I mean, it has moves. It has the ability to move, right? Even if it got back up to this old point here, you're talking about a 7-point move, and I could probably take a 3-point stop, 2-point stop. I'm thinking about Apple. Yeah. I don't usually like if we come all the way back down to a support, but it is Apple and I'm rooting for it. So I don't know. I'm open to the possibility. AIG is on my list. It's trending up. It's staying above its 50. It's sitting on top. Stochastics is oversold. We're on a Harami day, inside day, a bullish Harami of yesterday. If we get a bullish candle tomorrow, that would definitely give confirmation that this thing looks to be bouncing. So AIG is on my list. AMD, maybe. It's a little sideways now, you'll notice, right? A few times we hit that resistance level. Now we're back here. We are still above the 50. So maybe I would consider trading into AMD. We'll see. Amazon actually looks viable. That's on the list. You can see that we've consolidated and it's starting to turn. Amazon is a leader in consumer discretionary. Your stochastics is down low, starting to turn. This is viable as a consideration. Let's see, you might even have a Heiken Ashi starting to go, which might give you a little bit more ability to say, I'm not going to put my stop all the way down here. Maybe I put my stop underneath this body of this candle rather than the shadow of this candle. Anytime we can take like a buck 50 off of a stop and feel like we're not unreasonably tight with it, you're going to significantly improve your reward to risk ratio. So, sometimes people will ask me, well, yeah, you always look at this Heiken Ashi just to see if you could set a tighter stop. Why not just set a tighter stop? I don't want to just set tighter stops. I want to make sure that there's a reason that I'm setting tighter stops, where I'm saying, hey, this thing has shown enough that it's already given me this other type of a signal. The problem with today is, and the reason I wouldn't put it underneath today's low, this is not an established candle. This candle is fluid. If the market turns, and here's why, Michael, because if the market turns today, this candle could turn red. This is not locked in. This candle could turn red. So if I were to do this early in the day, I would probably have my stop here. Later in the day, I would probably have my stop here. If the candle got bigger later in the day, then I would put my stop here. And Michael, if it does ultimately produce a momentum candle, which is where we have a bigger candle with no lower body, I would trail. It's not a trail stop. I would trail the stop manually by using, like you can see here, move your stop, move your stop, move your stop. You could just follow these things all the way up. And when it gets to that point, that was it. That was the end of that trade. The Heiken Ashi worked great as a reference point for tightening stops. So Amazon's on the list for me. It's viable. Okay, let's move this back. AXP. I would say it's setting up. It's not giving a signal, but this thing is strong. The buyers have taken a break. But I have to watch. Well, I have to watch once a day, right? Once a day, I can come in and adjust it for the next day. And then the next day, I can do it again. And then eventually, Eventually, it'll get to a point where I say, I'm happy enough with this that I want to keep it. Then I'm going to switch those daily Heikin Ashi candles to a 4-hour Heikin Ashi candle. That's going to accelerate the stop process. Now, instead of once a day, twice a day. And then it's going to be quite a bit closer in proximity, which means it's, reducing the risk by that amount. And then I let that go. So yeah, I don't have to watch it much, right? I have to peek in, but I peek in twice a day, no matter what. That's on my schedule, my cadence. No, it's not really ever a day trade. It's never a day trade. It's just, where do I put my initial stop? If I'm day trading, I'm on a 5-minute chart, maybe 15. And it's a very, very different set of decision making. This is definitely a swing trade across the board. AXP viable, but not there yet. Still in setup. There's no trigger here. It's just, all I have is a bullish stock with a lack of buyer, the buyers have taken a break. What are the sellers doing? Nothing. So what's it doing? It's just kind of meandering sideways for now. It could definitely pop and accelerate out of this. So we have to watch it. You can see here, we consolidated and then it's popped. And then over here, it just kind of meandered. Finally, we got this consolidation. And then there. Problem with that one was, you would have had to have carried through earnings. In fact, I think some of us actually traded this and got out prior to earnings. And then, of course, in hindsight, you're like, well, you should have stayed in. Anyways. All right. Boeing, nothing. The buyers, look at tell me where you see where the buyers have said, oh, we're going to make a run at this thing. Never more than 2 days. Here they got 3, but they couldn't even get it back to this high. Make sure you're getting the story from the buyers and the sellers. BK, this one's a little bit too much of a, it's just meandering. It seems a little lost. I'm losing interest in Bank of New York. It's also, I'm going to pull it off actually. It's also a regional. So we might go do a financial search. We haven't done one for a while and say, hey, is there anything we should be looking at that we haven't? Because I feel like our financials are a little getting stale now. BLDR would absolutely be on the list. The problem is it reports earnings tomorrow morning. So all bets are off at that point, right? If earnings are great, it smashes it. If it's terrible, it drops. And if it's okay, then maybe it sets up the trade anyways. But for now, trend looks great. This is part of the contribution to industrials looking strong. However, I'm not going to trade in front of earnings like that. BX on the list. Absolutely. I caught this, got out here early. And it didn't come all the way down. I got out early thinking, oh man, I did so good avoiding this. And then bink, bink. Okay, fine. I got some here when it got to resistance on a Friday. That's a normal pattern of mine, sell a quarter to a third. And then the next day I felt great about only selling a quarter or a third. And then the next day you can see this thing went through a little bit of it. Still profitable trade. And now where are we? Looking for the next one still. Citi. So that's one I'm still holding. It just keeps, look at that. You can see why that trend line, or that trade line, not trend line, trade line. So I took this one and this one to make this composite. And this is what I'm hoping for. And so far, even as of yesterday, when it opened underneath it, I said, I'm gonna hold on to it and see. And by the end of the day, where was it? Back above, right on schedule. Look back here. Just because it drifts a little below this line, if you lose patience, you miss this, right? And so even if it slows down, you might still give it. Same thing over here. It slowed down and then bam, 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 bam. So right here, and look how frequently. Anyone in this trade, Citi? Because this was one we really kind of hit. You can see First half of the trade, it goes and then it starts to slow down. First half of the trade goes and starts to slow down. And then all of a sudden pops into the second half. Pops into the second half. That's the pattern. That's the pattern. Goes into the first half, slows down into the second half. What am I looking for here? Bam. I'm going to give it a day or two without, what have I done? I'll do what I normally do, quarter to a third. I have some profit ready to go. Then what? And I'm going to carry the rest of it. So that way, if it drops and I get out down here, I already locked some gain in and the rest of it breaks even, hopefully. And it's still a profitable trade. But if it catches, then I get the big piece of it to this higher level. Right? That's what I'm looking for. There's my trade management. Michael said I need patience. We all need more patience. Oh, try so hard. Told my kids they should be very glad that I got into trading because it has helped me to work on patience for the last 20 plus years. That certainly has parlayed into their lives. Caterpillar, Caterpillar false start, still hasn't broken support. That's a tough one right there because it's not wrong in that the premise of this trade is bouncing off of this higher low, and it's still at that higher low. So it's like, those are tough ones. It's not right, but it's not wrong, and you're just like running out of time. So there will be a time when, or there will come a point where time is what tells this trade that it's wrong. But yeah, it's still sitting a great distance above its 50-day. Okay. Capital One gap down on the news of the acquisition of Discover Financial Services, but it rallied the rest of the day. Overall, for a swing trade, still just kind of like in the same spot now, right where it was the day before the news, and here we are the day after, and it's all just kind of right there. Oil, iffy. Costco. Costco possibly a false start. If you like this, it's kind of stalling a little bit. CrowdStrike. Ooh, CrowdStrike was on our list because it was pulling back, and then I believe it is getting impacted, maybe corollary news to Nvidia, or that's what I would put it on. Nvidia reported earnings today, and these guys are in close enough proximity to that. It seems like it's more than a. Anyone know with the news here? I hadn't looked at that, but certainly changes things for CrowdStrike. Now it fell right on top of its 50, sitting on its 50. Does that mean I would trade to bounce off of it? No, but it is nice that it held the 50. With this type of a gap down, I absolutely would demand a higher low before trading it. I'm not trying to catch this. I'm thinking to myself, this is going to come up and then down. And then if I get a higher low, then I'm ready to trade. Now we have earnings not too far away. So what does it have the ability to create now? It's real uncertain at this point. So, all right, we'll just keep a quick peek. We're not going to spend a lot of time focusing on it. We'll just look at it. CSX looks viable. Buyers made a huge run, took a break. Sellers have done nothing. As soon as we're convinced that the next buying cycle has started, it's a viable opportunity. You can see it gave a little bit of a false start here. Here it is possibly going again. So yeah, it's on my list of considerations. Delta, no. DHI, no. They're both trying to hang on. I keep them because I want a candidate from both home builders and from airlines, but neither one is making me that interested. Let me know if you see it differently. The Dow looks fine. Well, a little bit of a pullback, but it still looks like it's maintaining its trend. Ford, viable. This, you can see our stochastics is pinching down here. Just made a new high. We're coming back down, higher low. You can see how this is old high, new low transition. A very classic pattern. I like the way Ford looks. Fastenal kind of sideways, nothing there. GBTC, Bitcoin stalled out for a few days. Now it's starting to consolidate down. It's such an interesting correlation between Bitcoin and GE right now. Like, it's just, I don't know. You guys seeing that? Very, very correlated between those two. There seems like there's maybe the potential for a conspiracy theory here, like the Illuminati are both on the board of GE and control Bitcoin. That's what I'm formulating. I'll talk about it on my conspiracy theory podcast later today. Okay. Gold recovered, but only recovering into still a slight downshift. Google, I'm hoping. So I'm hopeful for Apple, Google, and Microsoft, right? Like, I want them to stabilize. Apple almost got back to the old low. You can see Google kind of got back to the old low. We'd still like it to bounce. It's just I'm not looking to trade that. Home Depot, a little bit sideways. IBM, you can see, has gone a little listless. Great earnings, smashed higher. I tried to give it a go in here, failed. That was it for me. Now maybe it was back. No, that was it. It was here. It was here. Just failed the launch, got out. Tried again, failed the launch. Okay, it's going into a bit of a consolidation struggle. Intel, it's like it's trying something. Look at this weird pattern it's all of a sudden going through. It's trying. We'll see what it does. I would say the IWM kind of looks like a cup and handle pattern, and I would trade the handle. So here's what I mean with that. We got to this high. We consolidated down. We made this little cup. There's my cup. There's my handle, which would then make this cute little teacup, right? Now what? For it to really be a cup and handle, it's got to break. And when it breaks, we expect the cup distance to happen again. And it'll get up here somewhere above studies. Yeah. Okay. So again, this is important. It's important for our market posture that the small caps hold up. And possibly willing to trade it because I would love to catch the handle breaking out. That's a fabulous way to trade cups and handles. Cup and handles, cup and handles. IWM holding up though. JP Morgan looks a little overextended. Nothing there, but I would trade the next consolidation. Las Vegas Sands pulled back. Now it's starting to stabilize. It may just sort of slide on in. I'm good with it all the way to 52. There's these old highs here. You can actually see almost a big cup and handle. What does a cup and handle mean? It means we were at a high, we dropped, and then we've worked our way back up. And when it works its way back up to that old high, then the stock's memory kicks in. And everybody who's like, oh man, I wish I would have sold when it was at 55 because it dropped to 44. I mean, that's not terrible. It's, what, 20%? When it gets back to 55, they're like, oh, it's back at 55. And you can see it. It did. It got to 55 and it scattered. But when it stabilizes at 52 and creates the handle and then makes a run, when it breaks 55, it has blue skies. That's the whole thought process behind what a cup and handle is and how it works. Courtesy of Bill O'Neill from Investors Business Daily. Meta looks great. Am I right? Communication services, one of our strongest consistently over the last year. Meta has been a leader and it looks fantastic on this pullback. I would trade bouncing out of that pullback for sure. Looking for it maybe later this week. Microsoft, I'm okay with it still, but I definitely would like to see it catch above its 50. You can see it's starting to pinch down here in this oversold position. I would love to catch a trade on Microsoft, Apple, Meta, and watch the Nasdaq try to lead us out of this. The problem is we may see a little bit of sideways here. You may get into trades and have to sit in them a little bit and exercise that patience that we're talking about. Netflix setting up. Communication services looks great, setting up. It's funny though, because I feel like Netflix is kind of communication services / retail, but look, it's communication services. It looks good. NVIDIA reported earnings. It's dropped a little bit, but I would actually say this is where after earnings, we're seeing the potential for a trade setup. I'd love to see this volatility come down. I don't see the volatility coming out of this thing. I'd love to see this come back to 40 after earnings. You can see back here, it tends to have a pretty good drop after earnings. We would like to see that happen over here. The car, I would say viable in a flagging type situation, a bull flag. So last time when this thing consolidated, I'm almost at time. Last time when this thing consolidated, it was 1, 2, 3, 4, 5-day flag. Right here, we're on day 4. Well, you might not consider that part of the flag. Day 3 or 4. So what am I thinking? Yeah, this thing may come down and turn and never actually drop out of what we would consider to be an overbought territory, which is fine, right? Which is just fine. You can see how much progress this thing makes in overbought conditions, right? And then it did the same thing over here. It makes a lot of progress in overbought conditions. So yeah, I think we're doing okay. QQQ holding up, down but holding up. Ross Stores still down, but still setting up as well. SMCI, still trying to find its foothold. Hasn't done it yet. It's down almost 30% from the high 3 days ago. Shark frenzy. SPY, we are holding up after the opening range. Let's go take a look. The opening range held. If we break the opening range this way, I think there's a good chance we end up close to 497 at the end of the day. Right back where we were, right back above this trend line. And it held. If we break 495, I think it'll come down here and hold 494.5. But even that means we broke this trend. It's not enough for me to panic, but it definitely has me preparing to score it down when I do my forecast on Sunday. It looks fine still, though, right? There's no reason for us to get unduly worried. TPR still just kind of grinding higher right there, right? So, yeah, would I consider taking some profits, but still staying in and tightening my stops? Definitely. UNP, I like CSX better. Here's the VIX. Here's the VIX. So you can see right now we're trying to hold a same high, which would be great. Same high by body, lower high by shadow. If it turns over from there, but that's it's still the same high. It's not a lower high. And so if it did turn, what we would need to see is we would need to see it come down and not do this, because if it does this, that's just higher low, higher low, higher low. And we're continuing to think, man, this thing's still escalating. And we have this looming sense that it could pop up into this area. If it comes back down and gets down to here, that would be great. I hate when I do that. Sorry, give me 1 second. If it comes back and gets all the way below this level here, it invalidates that previous section, and then we look to see if it gets a lower high and confirm the next big wave. That's what we're going to be looking for. That next big wave that we come, starting early March, that lasts into April, hopefully. So yeah, right. Let's have an idea of what it is we're looking to see happen. Waste management just keeps on running after that earnings report. Walmart consolidating down. They gapped up on earnings, couldn't hold it. Now it's pulling back. Real quick look at our sectors. XBI, a little bit of a rally, but it's slowed down. XLB, materials popped and looked to be a little bit of in a flag pattern. Communication services have consolidated, but look bullish and look like they're setting up, like Meta, like Netflix. Look fantastic. I love communication services leading. Energy, iffy. It looked like it was trying to pop, but now it's kind of slowing down. Financial still looks great, and we want to look to expand our financial watch list. Industrial still looks great. Maybe same thing here. Let's check to see. So maybe the rest of this week we'll be looking to add some stocks there. Technology, little bit more of a drop than we want, but we've seen that before. We saw that here where it dropped all the way back to the 50 and then it catapulted. So, can I think this thing may go ahead and do this again? Of course. Nothing's happened yet that should have you in any way fearful. We're nothing more than mildly curious about the escalation in the VIX. XLP, fine, just staying in its same current trend. Utilities are staying low, nothing defensive there. Healthcare staying strong, and consumer discretionary holding up. I'm good. As of right now, the most we could maybe look to see is a quarter of a point drop on our market posture, but that could easily be offset if the VIX, if the small caps hold. That could easily kick our major market score up, and then it's a wash, and we stay the same score. So, that's how I see it. I've got my hedges on; they're working. I've still got a couple of bullish trades on, and they look okay. We're just kind of waiting for the market to just decide: is it going to just sort of meander a little bit? Is it going to make a decision? I'm not overcommitted to the market, so look at your stuff and ask: am I overcommitted? A good learning point. Once a week, maybe you just make sure you randomly ask the question: am I over trading? It's just a check-in. Am I over trading? Am I over trading? Because the definition of over trading will shift and change based on market conditions. So you might think, I'm not over trading at all, but all of a sudden you're like, wait a second, conditions have shifted. Am I still trading the same way I was before the shift? Then I probably am over trading. And just really make sure that you keep that in mind. Remember that we are finishing this week. We are finishing. Look at this beautiful plan. If you haven't done yours yet, we're about to start over. Next week, we're starting back over here on section 1. And if you give me 1 hour per day, 1 hour, or no, 1 hour per week, 1 hour per week dedicated to the plan, then at the end of a 2-month period, you will have a good plan. At the end of the next 2-month period, you'll have a great plan. At the end of the next one, you'll have an amazing plan. 6 months, 3 passes, you will have a trading plan you never would have dreamed of prior to starting with us. I promise that. We are working on goals and improvement strategies, setting process goals to improve the process. How do you set goals? Where do you set goals based on? Focusing on weaknesses and trading priorities. What specific areas do we look to try to impact? Right? So when you think about what are you doing with your goal, what does that piece of the process tend to contribute to? Number 1, number 2, or number 3. We want to be purposeful and deliberate in the way that we set goals and the impact we're trying to have so that we can then assess that impact in our record keeping when we move forward with it. So there it is. Get your goals in place. You should have at least 2 or 3 process goals at any given time, 2 or 3, where you're saying, this is my focus. This is what I'm working on, trying to fix, trying to get better. And then cycling through those to, again, that's how we achieve our Kaizen, our constant improvement. It's good to see everybody. Join me tomorrow night for post-trade analysis. Post-mortems is what I call them. After the trade's done, we exhume the body, we dig it up, and we go through and we give it a full analysis. Make sure we're learning from our individual trades. Not so the trade log lets us learn on an aggregate level from our composite results. Post-trade analysis, individual post-trade analyses, where we're saying, hey, let's look at our breakdown of every step of the process and evaluate, are we scoring at least a 4 out of 5? If it's a 5-star rating, am I getting 4 out of 5 on my setup, my entry, my stop, my target, my time frame, my trade management? We're going to look at each piece, because then what we're doing is looking to spot patterns in our individual trades that we can say, oh, you know what? This is where my trades tend to derail. Let's focus some rules on that and set some goals on that. All right. It's good to see everybody. Like I said, I'll see you tomorrow night, 8:30 p.m. If you can't make it, watch the recording. Join me Friday for our wrap up. Last 45 minutes of the market. We'll tie this thing off and go from there. It's good to see everyone. And as always, happy trading.